Good evening and welcome to episode 287 of the Private Property Podcast. I'm your host, Uzamantungwa Kumalo. It's a Tuesday edition of the Private Property Podcast. If you're joining us for the first time, where have you been? You've been missing out on great content that we've brought to your screens every single weekday at 7 p.m. So do make sure that you go to our Facebook or our YouTube page to catch up on all the great episodes that you've already missed out on. To all our regular viewers, whether you're watching us on YouTube, on Facebook, or on Instagram, welcome back. You know how we do it. Every single weekday at 7 p.m., you and I have an appointment where we always tackle all things relating to property. Doesn't matter whether you're looking to buy, to sell, to build, or of course, looking to expand your property portfolio. This is the only daily property talk show in South Africa that helps you along on your property journey. And talking about helping you along the property journey, you can catch our other great shows across Private Property's social media platforms. As it is a Tuesday, you can look forward to award-winning farmer Umbali Noko at 8 p.m., where she brings you the farming podcast. And you can also catch her on Thursdays with that same show. She's always in conversation with various people within the agricultural landscape. And it doesn't matter where in the agricultural value chain you want to tap into. That is certainly the show that can help you best make your decision on where the opportunities lie. And every Mondays and Fridays, we bring you the Home Shoppers Show with Chad, who brings us great tours and certainly a great look into some of the exquisite properties that you can find on www.privateproperty.co.za. And on Wednesdays, you can look forward to SC Claassen bringing you the First Time Home Buyers Show, which is always in conversation with people who've not only walked that first time home buying journey, but have gone on to grow their portfolio from strength to strength. Well, those are some of the great shows that you can look forward to here on the Private Property social media channels every single weekday. We make sure that we give you the best content helping you along your property journey. And talking about helping you along your property journey, this evening, we're going to be looking at how to qualify for a home loan in South Africa. I want to find out from you at home if you've ever had your home loan application rejected, especially if you're doing it for the first time. Do you know why it was rejected? Because I think it's one thing, to have a home loan application rejected and you kind of become despondent or demotivated rather, and don't want to apply anymore. But did you have a sense of why your home loan application was declined? So we're going to look at how you can go about certainly securing and qualifying for that home loan facility. You can, of course, comment down here below. You can follow myself at Zamantungwa_K on Twitter as well as on Instagram. And to help us get a good sense of how we can qualify, what we need to do in order to be able to qualify. And what we should probably start doing before we even look at applying for that home loan. I'm joined this evening by Natasha Champion, who's a regional sales manager at ooba Home Loans. Natasha, good evening, and thank you so much for joining us again on the show.
Such a pleasure to be here. Thanks for having me, Zama.
It's always such a pleasure to have you on the show, Natasha, especially because this is what you do on a daily basis. When ooba Home Loans tackles this on a day-to-day basis, you even have great data on what works, what doesn't work. Before we even look at some of the tips and tricks that we're going to share with our viewers this evening, perhaps first give us a sense of what ooba Home Loans is and the service that it provides, because I don't want to take it for granted that everybody knows ooba Home Loans, and certainly that everybody knows bond origination and what a bond originator would typically be doing with you or for you during your property journey.
Yeah, so ooba Home Loans is a bond originator, but we more specifically are a home loan comparison service. So just to simplify exactly what we do and make it easier to understand, we are here to ensure you get the best deal on your home loan, and we do so by a multi-submission process in order to shop around for the best deal. You know, in addition to that basic service, we are here to prepare you for submitting that home loan application before you actually even fall in love with the property and put an offer in on it.
And we'll talk about that a bit later on. I think so many people make that mistake, Natasha, of sometimes starting to view before, and especially when you know that this is now the time when you're buying. I think it's one thing when it's still aspirational. So you know that you're not really going to be buying in the next year or 2 years, but you're already just viewing to get a sense of what's out there in the market. I think that's one basket that's sometimes a bit small. The bigger basket that's unfortunate, I think, is people who view properties. They know that they're about to buy and this is their time to buy, but they haven't adequately prepared themselves for what's coming ahead. And they end up falling in love with the property and then only, want to get pre-qualified, for example, or work with the bond originator. Before we even look at how one goes about qualifying, why work with a bond originator or, for example, with ooba Home Loans? What benefits would people typically get when working with yourselves?
I mean, I think as you indicated in the intro, Zama, this is our speciality. It's a part of the banking system that is very specialized, and we do focus all home loans all day. We've experienced probably every single scenario you can think of in terms of a deal structure and an applicant type. So we really do have the experience, the passion, and the tools of the trade and the relationships with every single lender, specifically with the decision makers at a high level, opposed to kind of having to deal with a call center. That process can be frustrating for people that have attempted it themselves. So there is a level of deal making, of strategizing, and of putting that application together before we even submit to ensure the best outcome possible for the client. And above all, we give the client the gift of choice and options.
And I think that's probably one of the things that sometimes are very easy to take for granted, having the choice and having the ability to do that comparison. Well, then, Natasha, it brings us to the crux of our conversation this evening around how one goes about qualifying for a home loan in South Africa. Let's first look at the do's when you want to qualify for a home loan. So what should we be doing and getting right from the get-go that will help us qualify for a home loan?
So the banks are generally going to look at two major things when trying to assess, the risk profile of a potential applicant. Number one is going to be credit profile, credit score, and number two is going to be affordability. So I think first and foremost, if we understand our credit score and our individual credit profiles, where we potentially can do some work, where we potentially, home loans and property. They're a bit different to each other, even though they're so intertwined. Property, even if you're a hardened investor and a savvy investor and not necessarily buying for your primary residence, it's still a very emotional transaction. Now, the position of the finance side is that it's quite a black and white transaction. It's figures and facts. So to bring those two together, we always advise potential buyers to connect with a bond originator as early, even when they start thinking about making that home ownership dream come true. So we can tick those two major boxes: credit profile and affordability.
And I think those are two things that a lot of people, especially young professionals, sometimes we haven't quite wrapped our heads around. And when we look at credit score, Natasha, I actually want professionals, with so many of us also just being scared of debt, and you've got a good paying job, you're permanently employed or you're a contract worker, but you certainly can prove that you've got the monthly income, whether you're staying at home or even have, for example, you're renting, you're able to make that payment on time. But for the most part, you really don't take on in your credit, because you also have your own fears. You're just thinking, listen, I don't want to go take a big credit card, facility or take a big personal loan because I think I'm not going to spend it too well. So for people who then have a thin credit profile, how can they navigate qualifying for that home loan? Because I've certainly heard a lot of people in my age group, some slightly younger, so young professionals who haven't taken on, any or very little debt, who tend to struggle when it comes to when they want to get that first property because of a thin credit profile.
Absolutely. I think for most South Africans, we're always taught by our parents, only buy cash. And if you don't have the money, don't take out, any credit. So that's something that I think is intrinsically kind of wired into us. As soon as we start with our first job, start making a bit of money,
for a home loan in South Africa. I'm joined by Natasha Champion, who's the regional sales manager at ooba Home Loans, who's helping us best get a sense of what we need to do and not do if we want to get that home loan facility. We've got a question coming through here from Miriam Calvert, who says, I'm going to apply in November, but I'm scared that I won't qualify. My score is above 600. If my last missed payment was a year ago, how will this affect my qualifying?
So that's what we chatted about in terms of payment profile and how that's going to affect the client score. Obviously, it's a year ago since we missed a payment, and we've been up to date since then. The score will be positively affected, and 600 is the minimum score. We know, obviously, this client has done her homework. Make sure that from now until November, we are paying on time the full outstanding minimum payment before or on the due date. And if you can try and pump all, but if 100 Rand is due and you're paying 120 or 150, that's also going to go a long way. You need to prepare for the banks to ask the question, because remember, they've got access to 24 months history. So that they're going to still see that that's happened 12 months ago. So we need to be prepared to answer the question if it comes up.
And I think, one of the things, Natasha, that we've certainly seen, if I think a year ago, in Miriam's case, a year ago would have been when we were very deep into lockdown. So this time last year, things were quite bad. Many people's jobs got affected. So there's also, when it comes to making the bank understand, I think this speaks to what Natasha was saying, that a year ago was not, 2 years ago, where we could argue things were relatively normal, and they'd question it a bit more if you missed a payment. Last year, this time, even banks themselves, a lot of their staff members also weren't still working remotely. Others, systems were slightly slow. So there certainly is a case to be made about why that particular, one payment was made. And from then to date, you've certainly been on time. I've got a great question here also coming through from Facebook. It's coming from Ulindisi Chabela, asking, how will the pre-qualification work with regards to the new POPIA Act?
So obviously we're going to need to opt in. Once we engage with the clients, and specifically once we start switching personal information and the type of documentation that is required to complete this assessment, we've entered into a contract. So we're the provider, you're the client, and we are now partners. So the only question really is, over and above that, is if you are in a negotiation process with the agent, the question would be, Mr. or Mrs. Client, do you consent for us to share the outcome of this with the agent in question? Mm-hmm. In terms of POPIA, between us and yourselves, we're contracting because we are already, either you've approached us or we've approached you, and by completing our forms and by providing the financial situation, and obviously sensitive documentation, we will break down a list of exactly what our intention is with that documentation. We will obviously formalize that commitment in writing as to who and where that information will be shared with. And we very, very, obviously in our business, confidentiality is contractually in each and every single employee's contract. But with POPIA, it specify exactly where and how that information will be shared.
We are this evening in conversation with Natasha Champion, the regional sales manager at Uber Home Loans. If you are just joining us, I want to find out for your first home loan, and if you've went on and qualified for subsequent home loans. Did you have any challenges with it, and if so, what were some of those challenges? Natasha, we were looking a lot at what one should do in order to prepare themselves for qualifying for a home loan. Let's look at what we shouldn't do, because I think this is also one of those things where you need to know how not to go about doing something, or mistakes you want to avoid when you set your path on qualifying for a home loans facility.
So I think, speaking to the credit score issue, looking at the two major indicators, the credit profile issue, make sure, and I can't say it enough and I can't stress it enough, that you're servicing that loan on time and in full. So if the minimum repayment is 100 Rand and you're paying 99, it's going to leave a mark. If the due date is the 30th and you're paying on the 31st, it's going to leave a mark. So where at all possible, just set up that account, and again, reflect financial responsibility, which is how the banks are going to gauge your risk profile. Don't over-indebt yourself. The banks are going to factor in what percentage of your net surplus income. So if you're earning 10 Rand a month, if you're netting 80, and of the 80 that's left after all your expenses, is kind of servicing debt, that's going to be higher than their comfort level, because they're going to think that you're kind of, gearing a lot of your lifestyle. So they don't usually like 60% or more of your net surplus income to be allocated towards servicing debt. So be careful of your exposure. Be careful of how much debt you have relative to your net surplus income. So don't undertake more debt. Besides the couple of accounts we've already chatted about to get your score up. And certainly make sure you're servicing those accounts on to 8 weeks for that property to register and for those repayments to kick in. So until that bond approval is live and active, and you've maintained kind of at least 3 to 6 months of servicing that, I wouldn't advise closing accounts. You can pay them up, but certainly don't close them. So the accounts will reflect they're in good standing, even if there is no monthly repayments. I wouldn't close them completely and settle them. I'd take the balance down to a minimum. So the repayment is 10 Rand a month instead of 100 Rand a month. The same credit score benefits are going to apply.
Mm-hmm. And then in the event, the home loan facility, essentially, as the one that you prove to financial institutions, or where you have your credit score, and I know that this is an anomaly, because typically people wouldn't quite structure their lives like this. And the only reason I'm asking you, Natasha, is because I've seen a lot of young professionals who are who don't want to take on a lot of debt, and will go on and have a very keen interest on getting into the property space, and even getting a few rental properties. So they know that they're not just going to be buying for their primary residence, and they still want to not have a lot of credit, because they're actually just scared of it. As you're saying, a lot of us grow up with parents saying, if you don't have the money for it, don't buy it on credit. And for them, they've looked at this as a potential strategy where, okay, you've paid it for 3-6 months, and you'll close these accounts down because you've got the money. And now you're just going to be looking at, how can I get the next one? I've been paying this one for the past, let's say, 6 months.
A lot of tools out there, and I think the market itself has really started being cognizant of the first-time buyer markets, and the need for buyer education, and the need to engage with potential buyers and empower South Africans to become homeowners. So there
even small business owners, where we all know that the salary of a lot of entrepreneurs does tend to fluctuate. So for viewers at home who fall in that basket, we have done some great episodes with Natasha's colleague when we look at how you can qualify for a home loan facility if you are self-employed and what you need to be. Natasha, before we then close off, what tips would you give? First, I'll say to the young professionals who are about to embark on their first-time home